Welcome everybody to Navigating the Minefield, where I'm going to have a chat with Eric Maszynski about our views on the gold market and also on some of the recent interviews he's done with some of the legends in the mining space. Eric, good to see you.
Hey, you too, Roger. Sorry we had a little break, but we had to squeeze in some billionaires.
That's right. And obviously, before we go on, as always, this is not investment advice. This is purely for engagement and entertainment purposes only. Everyone should do their own research, work out their own time horizons, what they're investing for, and then invest appropriately on the back of that. Now, what I want to just kick off with here is, yet again, in terms of the actual market, which we should just touch on first. It's a bit benign because gold is still in the sort of 2,000, just slightly above 2,000 range. We've seen the miners a little bit on the back foot, a little bit weaker again, but it still really hasn't seen much change. It's almost like, there's no real fizz, there's no real need for people to sort of jump in right here, right now. But again, nothing's really changed for the last few weeks, has it?
No. Well, here's where my stance is on this, because on the one hand, I've learned when you're a mining sector investor, especially in gold, patience is very important. And however, I was getting maybe a little bit excited back, particularly, we saw that bounce in early December up to 2,100 in that area of gold. I've always said we need, monthly closes above 2,100 to trigger technical breakout that is an all-time high, that is a multi-decade long breakout, and it's quadruple top, and then gold will not take its time to go to 2,800, and that can change everything for the mining sector. And gold, I still believe, is the one that we need and want to see lead the way, meaning, then silver comes along, and then you start getting interest in other precious metals like platinum is very suppressed. Then you have the base metals that some people don't think that that's really correlated because gold is money, but then you've got economic and industrial metals, and that's all related to the economy. But I believe gold is the godfather still. And so I was wrong in the sense that I was overly bullish for January with regard to the miners. The miners, I believed, had dealt with a 3-year plus bear cycle that was peaking in Q4 with tax selling because we had a lot of other assets that were up. And then they are a candidate for that tax selling. And we've got all kinds of other issues going on in these markets. And right now, if you're a buyer and you have some cash and you're looking for real value, I think it's even helped you to make even bigger bets on stuff that's cheaper than it normally would be. But my thought was that the selling from those things, Q4, particularly with tax selling, long bear market, we would have seen a lot of these small ones even lift up like 25, 50, even 100% just on any buying with the ceasing of the selling. And I'm talking the low $20 million, $25 million market cap juniors, $5 million market cap. The reason those are important, even if none of the viewers are like, hey man, that's like ridiculous, those are too small. I get a gauge down there in that market. What is going on? I mean, I can look at the producers every day. That's easy. I can look at the intermediates, the developers and producers watch GDX today, and I have my favorites in the producers, and they will act usually a little bit better than those other ones first, and those as well. They had a little bit of a bounce, but they've really been benign, and so is gold, which is your point. But pessimistic side, in terms of not seeing a breakout on a monthly tract of gold above 2,100, we haven't seen that yet on a monthly close. However, we have seen not only two, I thought it was two. I thought in December and January, we closed twice. They're in the 2050 area, 2037 or whatever. But we did in November too. They're very subtle because they barely make it over that. But that, even I wanted to see 2 months in a row and or 2,100 getting closed decisively to say gold's going into a new phase. Otherwise, there is easily, especially what we're going to get in with the macro situation, there's easily the ability for gold now to fade back to 1,900, 1,875, frustrate everybody for another 6 or 9 months before it decides to go. I think that's the worst case scenario. I don't see this thing going out forever. Gold is overdue. It is way overdue for its final move above these levels. But, and again, you could also argue that gold has been very strong during this rising rate environment. And, in an area where you've got mostly headwinds usually for the gold price, strong dollar, I'm talking about the last couple of years, it's right at its highs. So I'm waiting for my signal. I'm waiting for the decisive move, because let me tell you this, what investors will know is that gold, when it starts to break and it goes, this next time, like say it goes from 2100 on volume, gold's gone. Gold will go to 27 to 20, call it 2600 to 2800 within 9 months.
And I guess, the other problem that we have in the gold market is that obviously there's a lot of other macro potential headwinds. And one that's just come up really in the last week or so is that we've just seen some stronger data. For instance, the ISM, both non-manufacturing and manufacturing, both rebounded. Manufacturing is still in contraction territory, but services isn't. But it's prices paid that rebounded. And we've seen, I think, a really good pullback in the senior loan officer survey, showing that now the sort of tighter credit standards for businesses have fallen away quite dramatically from their highs. So it looks like there's a reacceleration of the US economy. One of the reasons we've been seeing yields going higher. And these are things which could easily become short-term headwinds for the gold sector, precious metals. We've seen obviously yields starting to back up a little bit over this period as well. So you can just see how, and we mentioned this last time around, is that people are thinking about timing it, which is very hard in this space. There is this potential that rather than getting rate cuts when we expect them over the next 2 quarters, but actually we might end up pricing out those rate cuts because actually things are doing a little bit better. And also at the same time, the other thing is that we're seeing this concentration return in the US equity market. I think before Christmas, it broadened out a bit. We're now back to, I think it's 6 stocks. And we had this experience recently where there was something like 30% of stocks making new multiple day lows, whilst the market itself made a new all-time high. And I think it was Jason Gopfert who said that only happened once, which was August in 1929. Market did rally another 13%, but then it rolled over and you had the almighty crash. So this is a framework which, for timing anything, whether it's the equity market or gold, is pretty hard. But the one that you've always said, and it's something which I wanted to touch on because you've got these great interviews coming out. I don't want to reveal too much about them, but a commonality from Rick Rule, from Rob McEwen, and something you've been saying all along is that you've got to be contrarian in this space. You've got to be in it when everybody hates it and everybody hates you. Is the time when you've got to think about picking these things up. Obviously doing it sensibly over a period of time, because as you've always said, you're not here for a 1 week, 1 month, even a 1 year bounce. You're in it for a long-term play against fiat currency.
Yeah. Well, before I get into that, the answer, just a couple of comments on the macro. So I watched like the Jerome Powell interview on 60 Minutes last Sunday and everything else. And, listen, I'm an American. I want to see things going well here. Even as a gold investor, I don't like to see catastrophes where people get destroyed. But, the question I had for viewers is are you excited to buy an S&P index fund at these levels? I sure the hell am not. I'm not putting any money into the S&P or the Qs. The Qs would be better, I think over time, which we've seen that at least sort of keep up with debasement. But at the S&P, you don't need to necessarily be a stock picker if you're doing it long term, but focusing on when this is not trading up now considerably, the impetus for a Fed cut. Okay, I've got to believe, these guys and women are being very cautious about that first cut, right? What's going to make them cut? Is it going to be more growth in the U.S. with no problems? They can't. Something is going to break. They still have too high of rates for a lot of the regional banks that have these unfunded bonds on their books with losses. There are losses on the books that you're going to see, I think, more bank runs. Something's going to blow up. Something's going to break that we're not really expecting. That's one thing that I would say could change things, at least in the short to intermediate term in terms of sentiment. The other part being that valuations start to get way out of hand again, compared to growth. There is too much concentration in the U.S. markets. So But even in this case, look, I invest in metals and mining companies. So if that's a little bit of a headwind for gold for a longer period of time, I'm not in gold to get rich. I'm in gold to stay rich. So the fact is that silver, with a third of the demand, I think more than a third of the demand now are from new industries like solar and wind. And we don't even have the production and the pipeline of the mines to service this over the next 5 years. Same thing and you're looking at nickel, you're looking at all these different base metals. So that is something to take a look at if you believe that headwinds here and maybe then leads to China finally getting through their stuff. Look at commodities, okay? So, there's that part of it. But then also look at, here's why it's so important, when we're talking to Rick Rule and we're talking to Rob McEwen. So the cool thing about these guys is that, first of all, with Rick, he's known as an investor, right? But he's built financial services firms and banks that has been part of what has made him wealthy. But we got into some juicy tidbits there about some of the biggest winners that he's ever had and some of the struggles with that, the volatility we need to deal with, the disappointment. We're dealing with that now in the mining space. And the reality is, like an old investment letter, I cover larger companies and we certainly cover gold. And, I think anybody who covers gold that doesn't cover Bitcoin is pretty much out of touch with reality. But if you look at the junior miners and mining companies, there are a lot of things that can impact these that are economic or non-economic related, like necessarily in the macro. Like look at one of the ones that Rick told us about the, a huge winner that he had, which was in uranium. Uranium looks very good right now. Uranium is going higher. There's junior miners in the uranium sector that have went from hated to tolerate. And now there's going to be that new phase. Copper seems to start getting a bit of a bid in what I can see, like even in some of the junior mining stocks. And then all of a sudden, here's the most important point, and it's a little bit of an anomaly this morning, but after more of the grinding and not being right about more of a bump in the early part of the year, we've got this mixed arena in gold where it's had these high 3 monthly highs, all-time highs, closing bullish technically, but not where I want to see it. 2,100 close there, give me some big volume and show that you're really ready to go. But the valuations on these companies is the lowest that I've ever seen in my life. I talked with Rick. He agreed with me about this. We talked about 2015 being similar, but he's been through so many more cycles than I have. And anyway, this morning I wake up. This is just an example. This is the difference between some of these things in mining that you have to keep in mind if you're a mining investor versus looking at all this economic data. I wake up and I see headlines and a bunch of my people texting me about Focus Mining, which is FOKUS in Canada. It's a small company. They come out and they announce that they intersected 5 meters at 51 grams of gold at their Galloway project. That included 159 grams at 1.5 meters. They had another hole at 18 grams over 3 meters. And that stock went from 4 to 8 cents this morning before we got on the thing. So, those are small ones, but on a discovery or a drill hole, that can change the whole game for any one of these mining stocks. So what are you going to do? You're going to wait for gold to go to a certain level before you look at shopping for the discounts that are around us? I mean, even in most of the sector, that's what Rick got into. And then with Rob, we went through details of his journey on the operations side and some of the challenges that came up there at different periods. So it wasn't so clear that Rob McEwen was going to be one of the largest wealth creators for shareholders that ever existed in the mining sector at many different junctures. So, listen, contrarian, people talk about beingness. Who actually does it?
Well, this is the point. I mean, as Rick was saying, it's love, hate, and you've got to go in at the hate. It's not for the faint-hearted. In fact, you've got to go in where people are throwing you abuse, where people are becoming intolerant. And, you talk about these stocks and how you've picked them and often you've been sitting on these 50% unrealized losses. We'll hear him talk about one which he buys at 10 cents, it goes to 12, he thinks he's a god, and then it goes down to 1 cent. And he's thinking, okay, slap in the face, but eventually went to $10. The point being is that in this space, You're going to have ones which are going to feel like they kill you, but then you, as you always said, you've got your 10 or your 20 stocks because you know that half of them might be duds, but then 2 of them will triple, quadruple. And as you said just now with that stock, if you wait, you'll miss the quadrupling and whatever. So you kind of got to be in. But I guess it's because there's such a short-term bias for a lot of people. People want the lottery ticket. They want to be able to buy today at 5 cents and see it go out at $5 in a week's time and retire. And we all know that in reality, for 99.999% of investors, that's just not how it works.
No, and I mean, listen, the ones that are looking at next week, next month are people that are broke or that are huge institutions that run money and need quarterly numbers that matter very, very much, right? Both of them can be very stupid in their decisions because they don't, think not a longer term time horizon. But listen, this is where I've learned through many trials and errors, mostly errors. Moving from this to chase the hot potato and then getting caught in that, at the end of the run, big pullback. The one that was a cold potato starts to go and I'm like, shit, now I got to chase that and I lose my gains. You have to stick to your guns a bit. And I think one of the things that I've always thought about, but not always did the right thing was like position sizing. Take your time. Make sure you can hold these things. If you're buying something, you're able to hold it. You can wait. You don't have to sell something to pay your rent or pay your mortgage in a little bit of time if things don't work out soon. But I found that the more that I let go of the outcome on the timing with my investment theses, the more that stuff starts popping like popcorn out of nowhere, right? Like, look at this focus thing. I'm like, I just took we did a financing that I have a personal, multi-percentage, position in that company. It's a small company. I was just buying more. I mean, it was like, this thing is so cheap. And then I go in there and we do a private placement with warrants and I buy in the open market and it gets a little bump. And then it's like back down to where we do the placement price and everybody was buying who was in the market are already down from 6 cents to 4 cents. And it's like, here comes another one. We're going to have to just watch it drift and, whatever. Boom, drill result. That thing's hot. That thing is like, and the most money that they call it the Lassonde curve in mining, the thing that can end up really driving a stock in the mining space, regardless of the macro environment, is a discovery. And when you get a high grade discovery and you start to build that discovery out, it can drive massive returns in these things. But part of this series and part of what we get into with Rick and with Rob, you're wealthy, very wealthy. You can do whatever the hell you want. And you beat the game, right? So, but Rob, the first thing that he did as a project was a closed-end mining ETF that had a less than $50 million market cap that turned into Goldcorp, where he sold out at $8 billion after building that up for almost 20 years. Rick's story with things like the uranium play. I've been there, 10 cents to 14 or 13, looking good. I'm a genius. My timing is perfect. Down to a penny or two. Demoralization. It's going to zero. I got to get out. That's what most people do. I actually have learned in a lot of those cases, if my thesis is sticking, but I was just early, which you have to be, by the way. You have to be. It's better to be a bit early than it is to be a bit late. And then buying more of that. I've got many of my own stories, and these are stories that all you need over any 3 to 5 year period, Roger, is one of those. And the rest of your portfolio is moot because you can make millions and millions of dollars on modest sized investments that just about anybody can make when you're correct. And even if you just get in the ballpark of where you take profits and you don't even sell your whole position, but you stage it out, that's the excitement of that sector. That otherwise, why be in mining? I'm also a tech investor. I'm in crypto. I've got plenty of other action going on, but the mining was what staked my wealth by being right on several names to be able to parlay that into crypto and then say, I don't ever have to work again. So, hey, I love it. I hate it. I love it, but I love it overall.
Well, there you go. That is the hate love rule we'll hear about. And I think the important, thing that we've talked about very early on in this, which, I just always really push this because everyone should have, and we said at the beginning, their own horizon, their own requirements, because different people in different parts of their life cycle will want to take different amounts of risk. So I've got kids, I've got school. So I always have to think about liquidity mismatches between funding various things going forward and the sort of investments I can make today. So for instance, I've just taken off all my US exposure that I still had about 2 days ago, because I still think there's a bit more to go in it, but it just felt now there's a lot of technical, it's overstretched.
It's rocky.
And yeah, and and I feel now that we're in this scenario where if one of the main reasons we had this big run up is because we priced lower interest rates, and now those lower interest rates might not materialize because we're getting a reacceleration, then maybe the froth comes back off and I'll go back in again. But, it wasn't a massive position or anything like that. I just thought, okay. And I feel that there may be that little bit more of upside. But I've got those things where certain people, particularly when they're just setting out, they can probably take a few big punts, because if you're just setting out in life, you maybe just left school, high school, university in the UK or whatever, you can probably take a few more punts. The key point being here is that know your risk limits, your tolerances, the sort of person that you are. And if you love volatility, you love risk, and you're happy to put half your net wealth into it, fine, as long as you know that. But if you're not that sort of person, don't do it, because it'll, if it goes wrong, you'll beat yourself up even more.
Yeah. And, so good for you on that decision. I mean, you're not, you feel something, you see these markets, you have had good returns with that allocation. Not everybody's in this stuff that actively. They just sock it away and don't do anything. Some people are too active. But listen, man, you can afford to take a few punts if you want to. You just happen to be very, very conservative. But
there have been some names and some things from the interviews that are coming up where I thought, okay, maybe, and I think that's key. Is that we've got. So it's now been on the Real Vision platform, but it's going to come onto the YouTube platform in a week's time from this. But we've got that Rick Rule interview to look forward to, which I thought was fascinating because, we call it reminiscences of a commodity operator, like the stock operator story, because as you said, he's been in so many different parts of this business, from the brokerage side to financing companies, being an investor, effectively kind of running mines, etc., not directly being CEO, etc., but he's just done it from every single angle. And he's had, again, those, I've been there, came back down, gone back up, rebuilt it. I just find that this is what I call the mindset of the miners. It's that there's a passion in this sector of people who are willing to put themselves through the grinder and still keep on coming back for more because they absolutely love this sector.
We need these metals, man. If you don't have people like us funding exploration, development in new mines, you don't have a car to drive. You don't have a refrigerator. We don't have a modern society. I mean, this is just a fact. So then we have the financial universe and makeup of the way things are. And I think anybody with any sort of real honesty that understands the fiat currency, central banking model of various nations and how entrenched in debt that we are. We've heard this story of the dollar's going to zero and the world's going to hell. Listen, that's not my message. I talk to people in my life. My sister just, came and I was experiencing things on this investment thesis with her. She's a nurse. And I'm like, how expensive have things gotten at the grocery store and for kids' school items in the last 3 years versus today? And it's material. So the deal is that our currencies are being debased, whether you're seeing it or not, doesn't matter, which is also why you need outperformance. If you're not going to be the rat on a treadmill having to go faster and faster, you can actually chill once in a while. You have to take risk, and risk is relative. Like for me, I talked about like that little mining stock today. Okay. It's a penny stock with a tiny market cap. You know what I look at that as? It's a value investment, because this company's for 30, 40 years has built up, 2 million ounces in the ground of gold. There's value in that. Now, whether it becomes a mine ultimately, it's still going to take a long time, and, maybe an acquisition or a partner, that's still to be seen, but there's real progress that's been made there. So I know that I can invest in gold in the ground at a certain number, and nobody's paying attention to this stuff. And it's just left in the gutter. Most of the investors that are going to wash out are washed out. And it's like left in the hands of somebody like me. The other thing I'm a big believer in, when you're talking about, your U.S. exposure, the reason I say, hey, I get it, and, good for you, is because I don't have any edge with that. You ask me what is Amazon, Google, Microsoft, or Nvidia going to do in the next quarter or year or whatever. I have no edge. I have no information there that not everybody else has got better information than me. Everybody buys them through the indexes, which is where this is getting very concentrated. That concerns me as well. So, there's a lot of stuff out there that's been neglected in many different sectors, but in the mining space, the reason that some of us are so hardcore, it's not just because, you're like a gambler and you see some of these things make people rich or whatever. It happens. It happened to me. It's happened to me multiple times. And so for me, when I look at these little companies, even at the mining sector, I feel like I have an edge of information because there's just a negligence in such a small sector. And what ends up happening is that these things do run into bull cycles. And when you have shortages and everything else, all of a sudden the world goes, hey, we don't have enough copper coming up. We got to secure it. We don't have enough. And then you start to bring in the money. Like, look what's happened with lithium. It had to explode in price for people to start funneling capital in there so that hopefully in 5 or 10 years, even though there's tons of lithium in the earth, I mean, gold is much harder to find and extract, but they're saying, we got to get going on this. I mean, we're seeing the demand pick up from new sectors and things like that. So I think it's an exciting area because nobody's paying attention to it. A lot of people hate it. Most Americans and Europeans pay it no mind, and good for you. Let me make all the money because I will.
Well, I'm looking forward to revisiting your interviews because you did a great job. Obviously, Rick Rules first, then Rob McEwen. They're going to echo a lot of the points that you've made, and that enthusiasm from you and them, I think, hopefully will drag people into maybe re-engaging with this sector. So I'm looking forward to seeing those on the platform over the next few weeks.
Awesome, man. If you were considering a tiny allocation to Bitcoin and some mining stocks, we're making progress with you.
Maybe not. Who knows? A couple of weeks left yet. Have a good one. Thanks very much, Eric.
Cheers, Roger.